David is a college professor who does some consulting work on the side. He uses 25% of his home exclusively for the consulting practice. He is single and 63 years old. His AGI, without consideration of consulting income, is $45,000. Okay, and then we have some other information that you see on the screen. His income from consulting business was $4,000. His consulting expenses, other than those related to his home, so that would be his direct expenses, are $1,500. And then the total cost related to the home would include $6,500 for interest and taxes, $1,500 for utilities, $450 for maintenance repairs, and then $1,500, which would be depreciation on the business assets that he's using in his consulting business. Okay, so let's calculate David's AGI. I think what I'll do is just shrink this as we go. All right, so we start off and we say his AGI before his business is $45,000. Then we're going to add in his business proceeds, right, $4,500, and subtract out his business expenses, $1,500, and then we have to consider all those indirect items. All right, so when we consider those indirect items, we back out the $1,500 of direct consulting expenses, and I'm going to skip over interest and taxes here. Then we back out his utilities. We back out $113,000 in maintenance and repairs, and now let's take a look at the interest and taxes. So let me slide this off the screen here. All right, the 1625 represents 1/4 of the interest and taxes, and keep in mind that the 75% of that would be deductible on Schedule A. Now, all these other numbers are 25%, except for depreciation, because we're limited in depreciation to 387 because we cannot have net business income that goes beyond the adjusted gross income. And by the way, we've got a typing error here. There should be a T in there, so bear with that. So the end result is, because his expenses exceed his AGI, the adjusted gross income is his $45,000. Now, I just want to clarify on why we have net business income of 0. Remember that home office expenses that are not otherwise deductible, and those would be like insurance, utilities, and depreciation. So these are the items we're talking about, are limited to the gross income from the business of the home. Right? Gross income is first reduced by the amount of regular trade or business expenses, non-home related. In our case, those were the $1,500 shown here, and home expenses that would be deductible in the event, in any event. So mortgage, interest, and property taxes get deductible. And then if we have any positive income remains, the business can use portions of these other items, these other indirect expenses that can be deducted. So we're limited to the amount of our business income.